Good morning and welcome. Patriot Radio News Hour. Joe and Jason here on this Tuesday. Apologize for yesterday. We had some technical difficulties that we had to work through, but we got it all set and working, firing on all cylinders today. It's going to be another great show. All kinds of things to talk about in the year of chaos that, well, let's face it. I mean, it's lived up to its name, that's for sure. When we talk about where we're heading, is it, are we going to have World War III, the Fed cutting interest rates coming up here at the next meeting, despite the fact that today, and I got to say, I don't know that I've ever seen this, but today, home prices hit a new all-time record high, but yet we're going to be cutting interest rates. And this is kind of the dilemma that the Federal Reserve is in, because at the same time, so, think about it, right? Home prices, all-time record high. That you don't cut rates when you got home prices at all-time record highs. You cut rates, right, when home prices are crashing. That's when you cut the rates. No. But at the same time, the CEOs of America say, Jason, the layoffs are just getting started. So, right, it's the conundrum that they're in, right? It's either fight inflation or people are going to get laid off. And I have the horrible feeling that people are probably going to get laid off. And there's still going to be the inflation. I mean, that's really what we're going to be dealing with heading into the election, heading into 2025. The rest of the world has already said, hey, listen, we know the place to be. Gold is the asset. Gold is where we want to be. It has surpassed the euro. Think about this. It's taken out the euro. Yeah, they're holding more gold than euros, yens, renminbis. The dollar's still the only thing, at least for right now, that they hold more of. But, Jason, that's been falling. Let's face it, it's been falling for 2 decades now, the gold holdings of the rest of the world. It is really creating this environment with the boom and bust cycles that we're in, where a lot of these central banks and sovereign wealth funds, they're really getting nervous about what's going to be happening in the U.S. debt markets in particular. And there's a big article out yesterday about that. Then this morning, Bank of America out saying, hey, gold is the only place to be. And again, that's where we come in. Our toll-free number, 800-951-0592. But, yeah, Jason, I think it's going to be interesting as we watch all of these numbers coming in, and counterintuitive to, hey, we normally don't cut rates when prices are going up, and now we're going to cut rates on the fear that all the jobs are going to be lost.
Most of the time, when you get into a fairly serious recession, it's almost like a signal to all the rich buddies, hey, when we start cutting rates, get ready, the discounts are coming, right? That's good. I know it's what those big rich guys are doing. They're holding on to all that cash. They're waiting for the rate cut, which is supposed to help the markets. Supposed to, I guess it might give it that last little bubble blow, right? But if you look at the history of it, Joe, when the rate cuts start coming in, then suddenly some serious market stress happens. The last time the COVID, right? They cut the rates right before COVID, right? Suddenly, and you can blame you can blame whatever you want to blame, but man, I remember those days. Do you remember those days? 2,000, 2,500 point down days, 1,000 point up days, and just crashing down. Well, I don't even, what was it, 30% or whatever it was. It was a huge amount in a very quick time. It did come back really fast, but they had to print a whole lot of money to do it, Joe.
Yeah, and that's the thing. I think right now everybody's kind of waiting and seeing. They want to. I get it, right? You want to give the benefit of the doubt to the Federal Reserve because, well, let's face it, it's a debt money system, but they've never pulled it off before, right? They've never been able to do it. And I think today's data is a perfect example when we talk about, wait a minute, housing prices are at new all-time record highs, yet we need to cut rates, and at the same time, the CEOs of America, you have to go all the way back to COVID, when COVID first came out and the shutdowns came out, to get where you have these CEOs and CFOs this pessimistic about jobs. So obviously somebody was talking to Jay Powell before Jackson Hole, because remember, the reason that he gave was, hey, we're going to stop fighting inflation because we're worried about the job market. And today, you know, we got the data today that says, hey, everybody in the corporate world anyway is getting ready to swing the axe when it comes to jobs. So it's really a dilemma. It really, really is. And there's still people out there. I mean, I'm not buying it, but they're talking about 50 basis point rate cuts. We'd have to see something pretty dramatic. At least I think we would. Boy, a 50 basis point rate cut. Yeah, we'd probably be talking $2,700 gold if that happened. Patriot Radio News Hour. Joe and Jason will be back right after the break. 800-951-0592. Joe and Jason on this Tuesday. A quick look in at the markets. The Dow is, excuse me, I had a sneeze there. The Dow is down 12. The S&P is up 11. Had to do it again. S&P's up 11. NASDAQ's up 48 points. The 10-year note creeping a little higher here. 385. Again, the problem here in these debt auctions, right? Yes, the rates are lower, but people less interested in buying U.S. debt with these lower rates. Right now, gold, which had a big day yesterday, big problems in Libya. Yeah, I'm glad we destabilized that country as well. Right now, we're waiting. The two factions in Libya, the ones that control the oil fields, are calling for a force majeure. They're not going to export any oil. We're waiting for confirmation on what is going on in Libya right now. We'll keep you posted. That's 1 million barrels a day. So it's a big problem if they actually deliver on that. Gold, which closed at a record yesterday, right now just kind of hanging out, $2,517. You got silver up today right at $23 or $30. I don't know what I'm looking at here. Right at $30 on silver this morning. And again, we talk about diversifying and being diversified and understanding the bubble, the boom and bust bubble that the Federal Reserve put us in. And now Jay Powell has announced, I mean, this is what he said. I'm going to try to keep inflating the bubble. That's what we're going for. This is going to already, you know what, already people talking about much higher gold prices. This is actually, believe it or not, this is the best thing for gold. If that's what you're going for, right? You want higher, even higher gold prices. This is what you want. I don't know that it's good for anything else. And this is why we keep telling you, be more diversified than you've ever been. Right? I'll use Warren Buffett. Is he buying any of this stock market? Nope. What's he doing? Selling. Bank of America literally just came out and said, you need to do what central banks do, which means, hey, don't buy Wall Street. check out our friends at Y-Refi. Why? Because you can get up to 10.25% fixed rate of return, not correlated to Wall Street. What does that mean? Doesn't care. Do they care if they cut interest rates 25 basis points, 50 basis points? If they cut them 2 times, 4 times, 6 times, 10 times? No. It doesn't matter. Check them out. If you got to have at least $50,000 or more. Check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them at 888-YREFI-24. And again, like I said, Bloomberg is reporting that Libya's eastern government, I don't know what that means, but I guess they've got 2 different governments, says they plan to shut down oil production and exports after the Tripoli-based rivals move to replace the central bank leadership. So there you go again, Jason, right? Depending on who's in charge of the money, other people are like, well, you know what? If you don't have our guy in charge, we're cutting it all off. Kind of interesting that Libya is talking about. You're like, I was thinking, okay, what? They having another civil war or something like that? No, this time it's like, wait a minute. The guy that we want to run the central bank, you're getting rid of. We're going to shut down the oil then.
There's a lot of resistance to the old system, right, Joe? But we'll see where it all ends. Sure seems like there's a lot of puffing up to the old system, right, Joe? Hey, we got the new thing. We're gonna resist, but we'll see, Joe. We'll see if things actually change. And we know economically there's going to be some turbulence, but like the BRICS. If we talk about the BRICS, I was watching a video about the BRICS about how if this guy went over every single country that's in the BRICS and how economically in bad times they're in as well. And it's like, how can you replace the system that's in place if every country that's in your new system is having its own problems? So in Libya, Joe, yeah, that shows us some resistance, doesn't it? It's just, and if they shut the oil off and the economic implications of that, but will it stay? Will there be any meaningful change, right, Joe? And I would say probably not. I think where we're headed is inevitable, and there's not a lot of ways to. I think what you're reporting, Joe, is each of these countries is trying to figure out, you know what, I'd like to really be a part of whatever you're doing, but we got to take care of ourselves first. That's what you're seeing, Joe. You're seeing a lot of countries that are in a lot of trouble. I mean, just look what happened with Japan. They raise their rates a quarter point and the whole world freaks out, right?
Well, it's funny when we're looking at all of this kind of stuff because a quarter of a point, obviously, with what Jay Powell said, that's not going to get it done. He knows that it's not going to get it done, right? And they're talking about how quickly, all of these things, that they have plenty of room to cut more rates. But again, is it going to be enough? Red Lobster, which we know, remember, they filed for bankruptcy, shut 100 stores. It's now 129 stores and growing. They're trying to not go out of business completely, right? Big Lots, we get the same thing. Hey, we're going to close 300 stores. Okay, 350 stores. Okay, 400 stores, right? Walgreens, CVS, right? It's like, hey, we're going to start with 100. No, well, make it 200. Make it 300. I mean, Walgreens all the way up to 700 on their way to, unfortunately, I think they're going to be a lot closer to 2,000 stores. And then how about it? Here's another one of these signs. The RV boom appears to be over. They're saying that the RV dealerships are now saying that sluggish sales with no, immediate recovery in sight. In other words, they're saying, hey, that quarter of a point rate hike or rate cut, isn't going to help. Significant revenue declines being reported. Our best view is a sales trajectory that continued in July, saying that RV sales are crashing so hard that, Jason, some places are offering discount. Now, I've never heard of this. 55% off on certain RVs, saying that inventories, well, here's what they just said about inventories. Way too much inventory across the board. By the way, the largest, publicly traded RV company, stock's down 75% in a single year. Why do I smell bankruptcies around the corner in that industry?
We reported that a year ago, actually. I actually put a clip on the air. The guys had been through the RV sales freezing up right before the housing crash. And he was noting that where sales were before they froze up, before the housing crash, and then what happened, which it was like a light switch. It just the sales just shut off. Last year, that gentleman who's he's big into the business, he said that the sales levels and the shut off was way more dramatic last year when their sales just stopped. So when you're reporting a 75% reduction in sales in 1 year, Joe, that fits that time frame. Their business is completely done. And the rate reduction is not going to help RV sales. Who's buying RVs right now, Joe?
Yeah, it's again. I think this is the underlying factor. Will a quarter of a point rescue housing, which is already at all-time record highs? No. Will it save RVs? Will it save the auto industry? No. And this is why I think you're hearing Jay Powell talking about big amount of rate cuts coming. This is, again, why gold's the best performing asset. Bank of America said, hey, listen, gold's outperforming everything right now. It's outperforming stocks. It's outperforming bonds, obviously. It's outperforming the U.S. dollar. It's even outperforming the NASDAQ. And they said that when you look at investors who have largely shunned the metal, right? We talk about that. Only here have they been shunning it, right? But now all of a sudden, the largest inflows pouring into gold in the last 4 weeks. So what is Bank of America talking about? They're talking about the big boys, the big investment houses. These are going to be the hedge funds, things of this nature, going into gold and this is going to be the right paper gold, right? The ETFs. Jason, this has been the one source of gold supply had been selling of the ETFs here in the United States. And now Bank of America says that's over and expect gold to perform even better. Even, listen to this, the headline. This was their headline. Do what central banks are doing, buy gold. And it's so funny because, right, how many times have we been saying this for years? Be your own central bank, right? Because this is what they're saying. They noted, as I told you guys the other day, gold is now the second largest reserve asset in the world, and they're saying that they see more investor inflows. Downside risk continues to grow in the equity markets. What does that mean? In other words, stocks are overpriced. Downside risk to the equity markets. They don't expect the S&P to benefit as the Fed begins its easing cycle. That's kind of interesting. That's kind of counterintuitive, right? Stocks are supposed to rally when the Fed is in rate cut mode. But remember, stocks should have crashed, right? Because now they're going to lower rates because stocks, Jason, housing's at all-time highs, stocks are at all-time highs, and the Federal Reserve feels like they're being forced to cut rates. I've never seen it. This is the craziest thing, right? Year of chaos. We've talked about it, but we've warned. Could this be a recessionary cycle with high inflation? It sure looks that way, doesn't it? And Bank of America kind of sees the exact same thing. They said 5 out of 6 Jackson Hole speeches of the last 6 years have led to S&P drops of almost 10%. And, Jason, it's interesting because we really don't know. We've never seen the Fed do something like this in the past. And I think it just calls out the problem that we're in. When you have over 35, I mean, gosh, we're closing on $35.5 trillion now. I mean, we got up almost $500 billion in like a month on the debt. And today you saw, look at the 10-year note rising because the auctions aren't going so great.
Yeah, I said it last year that it's possible because I think we had like $3 trillion. We add $3 trillion to the debt, or $3.5 trillion, or was it 2.5? What it was early in the year we were talking, and I was like, well, 2024. I bet you could get $4 trillion. You could probably get $4 trillion on the book. You can get $1 trillion a quarter. It's all about progression, speeding up, right? I don't know if we'll get there, Joe, but sure is going to be close to add $4 trillion this year, isn't it?
Yeah. Well, I don't think we'll get $4 trillion this year. The problem is, can we get it next year? That's the worry. We'll be back. 800-951-0592. Joe and Jason, Patriot Radio News Hour here on this Tuesday. So here's what the consumer said in the Conference Board survey. The weakest labor market since COVID. So when they were talking to people, they're like, yeah, my job's either they're nervous about their job, lost their job, whatever the case may be. But then they also asked them about other trends. Do you plan to purchase a home, a car, an appliance, right? The big purchases. And the consumer said, I hate to say it, absolutely not from the consumers. Down and down significantly, especially when you look back, going all the way back to the COVID era. Here's the funniest thing. The only thing worse in COVID when the lockdowns happened was buying a home. More people were ready to buy a car or an appliance during COVID than they are today. So it's kind of that indication of where things are going to be headed. And I think it's creating this air of, okay, it's not bad yet, but it sure seems like things are getting ready to crack, right? We're seeing it in the consumer staples. We're seeing it now, Jason, with our customers, right? We hear them talk about it all the time as far as, hey, business isn't what it used to be, right? Yeah, I still have some, but you know what? I'm not booked 6 weeks out, 8 weeks out, 10 weeks out. Matter of fact, a lot of people are like, hey, I don't know where my next job is going to be coming from. And we're starting to see a lot of these things happening. It's going to be interesting, I think, as the next month plays out. If the data gets bad enough, will the Fed actually go 50 basis points? I don't think so. I don't think there's enough time for it. But it sure is interesting, right? The fact that if you think Wall Street isn't overpriced, right? Never do you. I've never seen rate cuts at all-time high stock prices, Jason. This is a first for me for sure.
There's always enough time before September for some big, huge event, and then the emergency is full on, right, Joe? And what do they call it? Emergency meetings? That could happen any day, right?
Right. Right.
They could drop it a whole point if they really think the emergency is bad enough. So as calm as the news cycle is, I think a quarter point is what they're going to do. But Joey, some things are economically are getting serious enough that you can see the half point coming as a possibility. But I think the talk is worth it, but most likely it's probably going to be a quarter point in September.
Well, let me just say this. Out of India, the Hindu business line say that the next BRICS summit is going to reaffirm that all of its members are voluntarily exercising their rights to de-dollarize their trade with each other, and saying that this will allow them to not only trade in the renminbi, but also trade in their own currency. So each country, according to the Hindu Times, the Hindu Business Line, that each country can establish, okay, here's how much we'll do in renminbi, here's how much we'll do, say in I don't know, Brazilian reals, the South African currency, Russia's currency, India's currencies. But the biggest thing there is that there is going to be a non-binding agreement on de-dollarizing trade between member states. They also claimed that the BRICS currency will have a value derived from a basket of currencies within the BRICS. So this is new. Here we go, Jason, right now. India, for the first time, saying, yes, we're going to come up with some sort of different basket, almost like a Bank of International Settlements basket, if you will, but absolutely going to be set up to where more and more of these BRICS countries are not going to trade in dollars. And remember, they're adding members like crazy, right? I mean, most of the Middle East now, a lot of there's something like 53 countries that want to join. They're not going to, now obviously they're not going to let them all in at once. But I would be shocked if by the end of 2025, you could be talking about 25 or 30 countries all agreeing we're not going to use dollars anymore.
Yeah, it'll be interesting to watch, Joe, as time goes on, because the BRICS, in my mind, is just trading one master for another one, right? Still central banks.
Sure it is.
It's trading one master. So what'll happen with the BRICS is I think it'll still become, especially with this next economic downturn coming, I think that the BRICS are going to use that as advertising to strengthen their conglomerate, their group. But what'll happen if this is a prolonged economic downturn? What if countries that are in the Brexit suddenly aren't so obliging in certain ways, right, Joe? What if the dollar doesn't fall as fast as their currencies are falling? Then suddenly Brexit could start falling apart. I just, I would love having competition for the dollar worldwide, because you would think it would open up opportunities, but I don't see it that way, Joe. I just see the Brexit as actually being a threat to America in a different kind of way, Joe. I think it can be a threat in a way that drags things down faster, and it's a good fall guy to point the finger at. Well, it's Brexit. It's those countries. It's their fault, right, Joe? It's their fault. Not that everything about the dollar is just sucking, right? Right?
I have no doubt in my mind that they will love to blame these countries for the demise. It's going to be interesting as we continue to watch, because it's something now where we're getting a lot more unifying statements coming out of these BRICS countries. It used to be, China would make a statement or Russia would make a statement, and then India would be like, well, nah, that may not be the case, or Brazil, that may not be the case. Now what we're seeing is all of these member states are seemingly agreeing. Yeah, we're going to do it, and we're going to do it voluntarily. Patriot Radio News Hour. I've got 3 great gold items. Only 3. Get ready to dial. Patriot Radio News Hour. We'll be right back. 800-951-0592. Patriot Radio News Hour. Joe and Jason here on this Tuesday. I've got some great opportunities this morning. They're limited. But we're going to do something. We've been doing some different things lately. We're going to try something a little different. We'll see how it goes. I've got 2 full rolls of 10th ounce American Gold Eagles. I'm going to take them down. You have to buy a roll. You can buy both rolls if you want. First come, first serve. $20 off our regular price, which we're like the cheapest in the country. Now we're just going to be stupid cheap because that's why we like to do it. $285. So you got to buy 50 of them. That's what comes in a roll. They're the golden dime, $285. That's $14,250. You're saving $1,000 when you're buying these 2 rolls. I only have 2. I cannot replace them. I cannot get them for that price. I mean, you're talking about buying 10th ounce. Jason, I mean, that's pretty much right near cost for a 10th ounce American Gold Eagle today. I've got 2 rolls. And then something that's just sitting in our vault. It's going to be 5 ounces of pre-1933 gold. 8 $10 pieces. Okay, so those are the half ounce. So there's 4 ounces there. These are going to be Liberties in a $20 sink. So you're going to get 5 ounces, $2,650 per ounce. You got to buy the 5 ounces. That's $13,250. And you're just going to have to take my word at it. I went to public school. It's too hard for me to do all the math. But you're saving big bucks here. Again, probably close to $1,000 on that deal as well. So you've got a couple of different opportunities here. I've got 2 rolls of 10th ounce, 50 1/10 ounce American Gold Eagles. When we talk about the bust, we talk about we know they want that digital currency. They want to track everything that we do. And it's, some of it really, Jason, it's not nefarious. It's just simply the fact that, hey, we're broke and we need the money. And the only way we can get all the money is by making sure we know everybody and what they're spending. I mean, look at what happened to the guy at Telegraph. Gets detained in France because the government said, well, did he do illegal things? No, he didn't do illegal things. But, hey, your encrypted system that allows for people to be private, we think people are doing bad stuff in there, so now we're going to try to arrest you for it. Privacy is something that is going to go away. Having barterable material to get things that you want, I think that's going to be a real thing in the next 5 years, 10 years. So picking up these roll of 10th ounce, $14,250 for the roll. That's $285 a coin. That is $20 off. There's no one even close to that price, right? Nobody. And then, of course, the pre-33, the most private way to own gold. I've only got one. You get 5 ounces for $13,250 at 800-951-0592. And, Jason, just another great opportunity to buy well below market pricing here at Patriot.
Yeah, it's always good to stack up fractional gold. So this is a way to get 2 rolls of it, and then of course you got the 5 or the 5 ounces of pre-33 gold. That's it's always good. It's always good to get some gold going on, get some silver going on, and we talk about these things every single day that are turning in the wrong direction, Joe. And this is why the customers that buy gold and silver from us seem to be the most comfortable, relaxed people I've ever met. They don't seem to have as many worries and cares as other people do. And I think the people that don't understand gold and are first-time buyers, I'm starting to get more calls again. They're figuring it out, Joe. It's they're feeling uneasy and worried about what's going on, and suddenly they're like, "Well, I would like to get into gold and silver." I'm thinking, man, you should have did this before you got a little worried, right, Joe? You should have, but better late than never, right? Better late than never to jump in, give us a call at the phone number, and whether you buy the specials or you want to buy in to anything else that we offer. It's better late than never to get in, Joe. Better to be early than to be late as well. So 1 year early is better than 2 days late if gold and silver really starts moving, because a lot of people are thinking gold is going to have some downturn or some pullback or something like it's a stock, and that's just simply not the situation we're in right now.
Well, and this is something too where I get it. I understand that sentiment too about, gosh, well, look at what it's done. It's got to slow down. And then you look at these statements that these BRICS countries, continually are putting out here. And now, openly just saying we're going to de-dollarize. That's something, right? Okay, when Russia says it, that's one thing, right? Iran says it, that's one. No. All of the BRICS countries have agreed now. India, China, Brazil, Saudi Arabia, UAE, right? The list just keeps growing. By the way, 2 lines open, so get it while you can. 800-951-0592. 800-951-0592. So we've got 1 roll of the 10th ounce left. That's it. This is a huge, huge opportunity. You're not quite at cost, but darn near it. 1 roll, got to buy the roll, $14,250. You're going to save $1,000. It's awesome. Then the 5 ounces of pre-33. You're going to save on average $133 an ounce. So for the 5 ounces, right, you're going to save $665 on 5 ounces. You got to buy, so you're going to get, let's go over that again, 8 $10 Liberties, 1866 to 1907, and then a $20 Saint, right, 07 to gold confiscation. So this is the most private way to own gold. Get 5 ounces today for $13,250. You're just not going to beat these prices. Silver-wise, I've got half bags of dimes, quarters, and half dollars. The dimes and quarters, a half a bag's $12,000. You want a half bag of halves? $12,500 today. 800-951-0592. And obviously, we're talking about out of India today, acknowledging that at the next summit, they already have an agreement in place. Whereas India is putting it very simply. All of our members have agreed to de-dollarize. And yes, the renminbi will be the biggest piece, but here was the thing that really made sense. Hey, by the way, we're also going to use our own currencies. We're going to have kind of our own little brick basket of currencies. Let's not forget, they announced last week BRICS Bridge, right? That is their digital way of clearing trades with each other. Then they followed up this week with saying, hey, it's ready to go, Jason. We thought this was going to be something that happened next year. Apparently, I don't know, that whoever the holdouts aren't holding out any longer. And all of a sudden now we're going to see another step forward. More countries deciding to de-dollarize. These auctions are going to get really weird really fast, especially when you have the Treasury, those times when they got to refill up the checkbooks and all these other things. Very interesting what's happening right now with this all. And like Jason said, listen, they want to, it's the same system. It really is. But here's what essentially really China and India are saying. We want a spot at the table. Period. India's letting it be known, hey, we know China's got a spot at the table. We want a spot at the table. I think that's what we're taking out of this announcement out of India today, because they're like, yeah, the rupee's going to be involved here. We're going to be trading rupees, don't worry.
Uh-oh. The BRICS may not be as stable as they're going to want everyone to believe, Joe.
A roll of 10,000, 14,250. 5 ounces of pre-33 gold, 13,250. Insanity pricing. We got half bags of dimes,